Or you can check out that video, or you can find the link down in this, or you can find the link down in the description, or you can find.
Oh my god.
Bradley and Janine here. We're 9-to-5ers who love to travel to explore different places, try different food, and experience different cultures. Aside from that, we also have a passion for personal finance, which led us to enjoy free hotel stays, free food, and flight rewards for the past few years. One of the main things that helped us acquire these freebies was having a high credit score. It allowed us to take advantage of all of the rewards that premium credit cards have to offer. Throughout the years, we learned and developed some habits that helped us maintain our good credit, so we thought to share it with you.
And we're here today to share with you some of the things that we learned that helped us improve our credit score here in Canada. We're not financial experts by any means, we just want to share what helped us so that maybe it'll help you too. Back in 2020, we released a video explaining what a credit score is and how a credit score is calculated by the credit bureaus. We recommend checking that out first so that the tips that we share here in this video will make more sense once you have an understanding of how it all works. You can check out that video here, or you can find the link in the description box down below. But just as a reminder, your credit score consists of these 5 factors: payment history, credit utilization, length of credit history, number of recent credit inquiries, and credit mix. Before we discuss our tips on how to improve your credit score, don't forget to give us some love by hitting like and subscribe. Boom! Alright, Janine, take it away.
Alright. If you're just starting off, for example, if you're a new immigrant or if you're a student looking to handle your own finances, our first tip to you is to get a credit card. Getting a credit card is one of the easiest way to build your credit history, which also helps contribute to your credit score. Now, you might have read that credit cards are bad for you, and I would tell you that that's 100% true. If you're not disciplined enough to pay your bill in full, then you'll have to pay for the sky-high interest most credit cards charge. And on top of that, your credit score will also take a hit. On the flip side, if you do pay your credit bill on time, consistently, month over month, you'll be able to demonstrate to lenders that you are responsible with your credit, and you could also benefit from the rewards your credit card is offering you. And that actually leads us to our second tip, which Bradley will be sharing with you.
Pay your bills on time and in full. It seems self-explanatory, but given that that's the factor that matters the most here, if you miss a payment on a credit card or on your loan and that gets reported to the credit bureaus, your credit score could drop. Furthermore, the later a payment is, the more your score could fall. And to really hit this home, that late payment can stay on your credit report for up to 6 years. Remember, creditors and lenders look at your credit report in order to make a decision on whether or not they lend you money. Having late payments on your credit report is like saying, I don't pay my bills on time. Now, if you were a lender, would you lend your money to somebody who can't pay their bills on time?
Nope.
She wouldn't. So, make your payments on time and in full.
What if someone always pay their bill on time, but one day they slipped? Will their credit score drop automatically?
If that happens, don't panic.
Okay.
You may be able to save yourself by immediately paying the bill off and telling your credit card issuer that you made a late payment by mistake. Oftentimes, if this is the first time you missed a due date, or if you have been making payments on time on a regular basis, the credit card issuer won't report your late payment to the credit bureaus, and if you call in, they may even refund back the interest you would have had to pay.
Makes sense. So I guess, as a side tip for you guys, to avoid missing a bill deadline, create a finance tracker or a budgeting sheet and ensure you have those deadlines noted in your calendar. Or you could also just set up pre-authorized payments. That will make your life so much easier.
Great points, Janine. Those are definitely something to consider so that you can manage your finances more effectively.
And now, on to our third tip. When it comes to your credit cards and credit lines, the rule of thumb in Canada is to keep your credit utilization below 35%. As a refresher, Credit utilization is a rate that indicates how much of your available credit you're using. So in other words, it's your total credit balances divided by your total available credit. So, for example, if your credit balance is 1,000 and your available credit is 5,000, your credit utilization is 20%. The higher this rate is, the lower your score will be.
So, just as an example, if somebody bought an OLED TV recently and that put a lot of balance on their credit card and raised their credit utilization to maybe 50%, what happens then?
Well, in this case, in order to stay below the 35% credit utilization, that person could simply pay their credit card before they receive their credit card statement. So, kind of similar to what you do. Want to tell them about it?
Yep, sure. So what I do is I treat my credit card like a debit card. In other words, I don't spend more than what I have in my bank account. So when I go to a restaurant and I pay for my meal with a credit card, I take that receipt, and then when I get home, I pay off my credit card balance with the exact amount that shows up on the receipt. Doing this helps keep my credit utilization under 10% on a regular basis, and I also get points and cash back depending on the credit card that I'm using.
Alright, I think they're ready to hear number 4.
Alright, next tip is to not close your credit cards.
Okay, but what if someone is not using their credit card anymore? Should they keep it still?
Well, the answer to that lies in both the length of your credit history and credit utilization. So say you had 2 credit cards and they both have a credit limit of, say, $1,000 each. If you spend on a monthly basis $500, your credit utilization in this case would be about 25%, which is below 35, which is good. Now, let's say you close one of these credit cards, but you still have that same monthly expense of $500. That would bring your credit utilization number to 50%, which is higher than what you want, 35%. So, and furthermore, closing old accounts can damage your credit scores as it will shorten the length of your credit history. So from that perspective, it would be best to keep the account open for as long as possible and to also use it occasionally too, just so that you show the credit bureaus that you have activity with your credit products.
But what if someone pays an annual fee for their credit card? Should they keep it still if they don't want to pay for that annual fee?
Well, if you would like to avoid paying your card's annual fee but would like to keep the card open for credit history purposes, you can actually call up your credit card issuer or bank and ask to switch your card to another one that doesn't have a fee.
Okay.
This is known as product switching, and another added benefit to product switching is that when you apply for another card in this way, banks won't initiate a credit check because you're not asking for more credit. You're just moving your credit limit from one card to another.
Okay.
Simple as that.
Cool.
Are you ready to give the next tip?
Yes. So, tip number 6 is pay your bill twice a month or pay it whenever you have extra funds. So instead of making one big payment at the end of the month, you can try splitting it up into smaller payments every 2 weeks. And this could help you sneak in a few extra payments each year and save money on your interest charges. And the extra payments can actually help pay down your principal balances faster, lowering your account balances and credit utilization ratio, which can help increase your credit score. And this is something that I do all the time. I get paid bi-weekly, so I also assess my financial situation bi-weekly and I distribute my funds accordingly using my budgeting sheet. And this actually helps paying bills more manageable for me, so give it a try.
This next tip is for those of you who have multiple forms of debt, and that is to gather all your bills, all your debt, and come up with a plan to pay them all off. There are several methods to do this. The snowball method focuses on paying off the lowest balances first, and there's also the avalanche method that focuses on paying the balances off with the highest interest rates first. If you have too many credit cards to keep track of, you can also consolidate your credit card debt to make it easier to manage your monthly payments. That can be done by getting a line of credit, and that's a discussion that you can have with the bank. All three strategies could help you pay off your credit card debt more quickly, lower your credit utilization ratio, and raise your credit scores. So choose the plan that works best for you and stick with it.
I guess that brings us to our last tip, and that is to monitor your credit. I mean, how will you know if you're on the right track if you don't even know where you are right now? And I know you might be thinking, don't you have to pay to see your credit score? Nuh-uh, not here in Canada. There are services that allow you to view your credit score for free. You may already have access to your credit report or credit score depending on the financial institution you're banking with. But what both Bradley and I use are Borrowell and Credit Karma. So these companies are able to offer you these services for free because they use your credit report to recommend to you various credit cards, loans, and other financial products. And these companies also send us monthly reports so we always know where we stand, and it actually helps us make better financial decisions.
And that's all we got. There you have it. Again, we're not financial experts. We're simply sharing what worked for us so that hopefully it'll help you too.
So if you learned a thing or two, or if you found this valuable, please feel free to share. And also, if you can give this video a like and our channel a subscribe, that would be greatly appreciated. Thank you again, and see you soon. Bye.
Bye.
Okay, that's it.
Yeah.
High five.